What's going on, everyone? Man, if you've been following the channel, then we're really hitting home here with these filings. So we had 7 approved today, right? Regarding liquidity, market share, and price discovery. In essence, taking things or taking a bit of that market share away from the dark pool. In essence, so we have another one coming out from the Box Exchange, and we also had a similar one filed from NYSE Arca as well. And this is SR Box 2021-15. Notice of filing and immediate effectiveness of a proposed rule change to amend the fee schedule on the Box Options Market LLC facility. Now, fee schedule, anytime you see that, it's likely going to be due to liquidity and or order flow. So we've been seeing a lot of these come out, and since this one's filed and effective immediately and we have it sitting on the register, it will be published and implemented tomorrow on 6/29/2021. Now, the purpose of this, very, very simple. They want to increase the fees only for market makers. Only for market makers. From 25 cents per contract to 35 cents per contract if they're doing a manual order. So this is great. And now it says here at the bottom that not only did Cboe have a recent filing that did this as well back in 2020, but the exchange also notes that NYSE Arca recently filed very similar filing that did the same thing and increased the fees to 35 cents per contract to do a manual adjustment. Now it says in the filing, in the backdrop of the competitive environment in which the exchange operates, the proposed rule change is a reasonable attempt by the exchange to maintain its market share relative to its competitors. So if you know this channel, I've been talking about market share, liquidity, volume, and price discovery, especially related to ETFs, for the past few weeks now. It seems to be the bulk of the problem, considering dark pools have the majority of the market share on a daily basis. Hopefully today we see a difference in the market share. Hopefully we see that ADF and TRF go down a little bit. However, filings like this continue to come out at very high speeds. File, effective immediately. Typically, once they're posted, they're approved the next day. So this one should be good to go tomorrow. And in essence, the exchange also believes that increasing fees for the manual transactions by market makers, but not for other market participants, is not unfairly discriminatory, given that the proposed rates and resulting disparities are a competitive response. There are currently 16 registered option exchanges competing for order flow. This is a reoccurring paragraph that you're going to find in most of these filings related to fees. Based on publicly available information and excluding index-based options, no single exchange has more than 16% of the market share of executed volume of multiply listed equity and ETF option trades. Therefore, currently no exchange possesses significant pricing power or liquidity in the execution of multiply listed equity and ETF option order flow. More specifically, in April 2021, the exchange had less than 6% market share of executed volume of multiply listed equity and ETF option trades. So again, all this is doing, trying to get more market share, more order flow, more liquidity, so that we can take some of that back from these dark pools and start actually having price discovery in the market. So I think we hit the nail on the head here with the market share, because that is exactly what they're doing. Got a couple more to talk about, and I'll talk to you guys in a minute.